Hi there, thanks for tuning in. Today we're going to be doing an analysis and valuation of Wacker Chemie AG. This is a German chemicals company, so let's just hop right into it and hopefully we'll learn something new about it. So, at a glance, what they do is that they provide polysilicon, silicones, polymers, and biosolutions. Polysilicon is essentially the number one chemical used in semiconductors. So that's very important. That's a growing industry. That's something that's always going to be needed. And it's something that they provide in great quantities along with silicones. Those two things make their largest market share, right? Or the largest share of their revenue. Now, they did 8.21 billion euros of sales in 2022. They had 2.09 billion of EBITDA in 2022 and an EBITDA margin of 25% or a little more than that. Okay? So I like a company that has four very simple business segments because you can understand what they do and how the earnings manifest or where they come from. This is a company that you can study and make sense of pretty easily. So I think it's a great little case study. Now, they recently acquired ADL, so they're growing their biotechnology business. As you saw in the other slide, the biosolutions is by far their smallest segment. However, they are clearly wanting to grow this. So they recently acquired ADL. Now, acquisitions are generally not some of the greatest things for a company's balance sheet. Usually you have to overpay a little bit for an acquisition. You have to take out debt. So we're going to see how that manifests. And it isn't always smooth riding. Usually the best thing they can do is buy ADL, synergize it with the business, and leave it doing its thing. However, sometimes there's a little bit of pain. There's a little bit of not earning as much as you potentially could because you're still synergizing both companies together. So we'll see what happens. But if biochemicals are growing a lot or biotechnology is growing a lot, then they're clearly investing in what will grow the most in the future, right? So they talk about silicones here, where they're an integrated specialty supplier. They essentially provide businesses with silicone, right? And look at this. So from 2012 to 2016 all the way to 2022, their EBITDA margin was growing. However, for the first half of 2023, their EBITDA margin for silicones is down significantly, below even 2012 levels. So that's something to note. That's very important to note. Now, polymers, we see a similar story where their EBITDA margin is back at 2012 levels. So we see a big decline in EBITDA. However, we do see here where basically sustainability and smart construction is going to require more polymers. So there's going to be from the plastic to paper trend or stuff like that. This is going to be something that is going to affect Wacker Chemie, and we'll have to see how that's going to affect them in the long run. However, they stand to benefit from a lot of green transition things. So the biosolutions is also a thing where in 2012 they had a 16% EBITDA margin. That has grown, well, the total has grown, but the margin has shrunk a little bit. It was 13% over here, 5% over here, now minus 1% of an EBITDA margin. So clearly this may be an area that's growing a lot, so they're investing in it a lot, but because of that there's not such a huge margin, right? So they do have a capitalization from this consumer focus on health and well-being, right? This is a trend now that they stand to benefit from. And also some of their medicines such as mRNA or pDNA are very interesting and have a lot of potential, but for now it's not necessarily profit producing. So it's something that has future potential, not current potential, and it's not going to manifest in the earnings right now. Now, polysilicon, this is really interesting because it's very important semiconductors, it's very important things such as solar panels and a lot of the new green economy things as countries transition to net zero and to green things. Polysilicon is going to be very, very important. Again, we see that the EBITDA is all over the place, the EBITDA and the EBITDA margin. This shows that they are going to be vulnerable to some cyclicality here, right? In 2022, there was so much demand for it. Now, in the first half of 2023, it cratered a little. So this is going to be important. Clearly, they're affected by the semiconductor cycle. Now, here's their guidance for 2023, and you'll see that their guidance is down significantly. It went from making 8.2 billion euros in sales to now somewhere between 6.5 and 6.8 billion, which is down even from before. Same with EBITDA. Their margins are going to be substantially lower. They're not even giving us a number. Their net cash flow is going to be positive still, but substantially lower. And the CapEx is going to be higher. Now, their low net financial debt, yeah, they don't have a lot of debt really, so this is not something to truly worry about. But yeah, I mean, they're looking for a very tough 2023. And the reason why, as they explain in their financial report, and you should read their annual reports, go through their investor presentations. What they're explaining is they're a business-to-business company. And there's this common belief that business-to-business companies aren't generally affected as much by things like inflation or higher costs because then less consumers will buy it, right? If there's an economic downturn, the consumers are the ones who are not buying, not businesses. However, what happens here? So Wacker Chemie supplies, let's say, silicons, polymers, etc., to these companies that then sell those to the consumers. However, in 2021 and 2022, they accumulated a bunch of inventory. Right now, they're trying to get rid of that inventory, which means that those businesses that Wacker Chemie works with are ordering less from Wacker Chemie because they're trying to get rid of current inventories. They don't need their chemicals and their materials yet because they're still trying to get rid of last year's inventories. So that leads to less demand overall. So at the end of the day, even though it's a business-to-business company, Wacker Chemie is intrinsically linked with the global economy, and that's very important to note. Now, here's another important thing. The cost of silicon metal, the cost of electricity, the cost of natural gas, all of this went up in 2022, right? For reasons that we can pretty much guess. However, this doesn't affect them till later financial reports, right? So even though it's back down now and it may affect them less in 2024, it clearly affected them in 2023 because it was greater overhead, right? Fiscal year 2022 only represents really a lot of the earnings from before that. So this is going to affect them in 2023 clearly, okay? Now, I'm going to do a discounted cash flow model. What I'm going to do here is I'm going to get an average ratio of how much of the revenue they turn to free cash flow. Essentially, that ends up being around 7.5%. I'm going to knock down a couple points. I'm going to say from now on, it's going to be 6.5% of revenue is going to be turned to free cash flow. This is just to be conservative. And they were saying the cash flow was going to be lower next year. So I'm just being conservative here. Likewise, I'm going to say that revenues decrease by 5% next year compared to the 2022 revenues, and then increase by 3% in perpetuity, which pretty much matches the growth rate of the company before, and 3%, in 2024 through 2026, and then 2% in perpetuity. And I think that matches the growth rate of the company before. Clearly, it's poised to benefit from some trends such as the green economy, semiconductors, which are cyclical but always growing, so I think it is fair. Now, I want a required rate of return of 11%, which is 1% more per year than the market itself. And over time, this is going to be a whole lot more. And so I'm going to put these free cash flow numbers in, divided by the total number of shares out, and I get a fair value of equity of $136.18. However, we have to account for the net debt. And after accounting for the net debt, the fair value becomes $126.93 with net debt included. Now, where's Wacker Chemie? Interesting. So clearly, they're really close. In fact, they're smack dab between this 136 and 126 value that I got here. So, and you'll see that even recently, they were down at the 100 level, and they've hit maybe 125 over here or so. So, it's not unheard of that they'll hit this level. So, basically, it could be a good idea to wait. Would I buy it right now at this level? Not really. But if it hits this $100 level again, I would very seriously consider it, because at the end of the day, this company is ever growing. In the very long term, it's poised to benefit from a lot of trends, and there will be a lot of demand for silicons, polysilicons, their biotechnologies, and their polymers. And at the end of the day, even though there's a lot of pain, well, at the right price point, I could be interested. So let's talk about the opportunity or the risk. So if this downturn in earnings is temporary, then it could represent a fantastic buying opportunity for the underlying security. Wacker Chemie stands to benefit from many long-term, such as the green economy, that's been established. Long-term partnerships mean that earnings will pick back up when demand from partners picks back up. As I was explaining, right now, they have a lot of inventories that they're trying to get rid of, but once they get rid of that, they will start buying again from Wacker Chemie, especially because they have their trusted partners and whatnot. And another important thing is they don't have a lot of debt, and they have a little dividend, so that's pretty good, right? So far, so good. However, Global economic slowdown, as well as higher input prices, such as the price of electricity or the price of raw materials, disproportionately affect Wacker Chemie, as seen in the first half of 2023. Demand was expected to pick back up by now, but this has not been the case, hence the reduced guidance. And the ADL acquisition adds debt and may result in some difficulties with synergies taking time to develop. So those are the risks. And essentially what I'm going to ask you is, what's your time frame? Because if your time frame is the short to even near medium term, I would say Wacker Chemie may not be interesting to you at all, because there may be more pain in the horizon, especially if there's a prolonged economic downturn in the world, right? Then Wacker Chemie wouldn't do that great. However, if your time frame is to buy and hold this forever, or buy and hold for at least a decade, well, in that case, Wacker Chemie almost seems incredibly interesting, because they're poised to benefit from a lot of things, and at the right price, you could stand to gain a lot from this company. So, with that said, I hope this was informative. If you like videos like this, please like and subscribe, and if you have any stock you want me to look at, please comment down below, and I would be very interested to look at it. So, with that said, thank you so much for watching, and I hope you have a great rest of your day.